All business loans, no credit check, up to 5 million, startup friendly. Is it possible? Hi, welcome in. This is Michael with Viral Funding Solutions. I'm a business funding expert and business loan broker expert, as well as pre-underwriter slash underwriter who's been able to help a lot of people acquire the right type of funding under the right strategic partnership and roadmap for longer term without overpromising, without overwhelming and under delivering. I don't do those things to you, and I don't pressure people. I'm not a sales type of person. I have an academic background. For a bit, I studied chemical engineering for a little bit, my favorite class being chemistry. And then I wanted to start a business, so I went into the business side and went there. I've worked in different roles. I was in manufacturing, construction. I did ramp agent, warehousing. These things were in my younger 20s some time ago, eventually getting into financial logistics. And with the huge contracting company servicing HP and Peace Health, company went down under. They had to relieve 50 plus people. Not my wrongdoing. I had to go back on unemployment benefits and food stamp cards. Not a good feeling at all. And I'm an introvert. I'm very analytical, very cerebral. So it's hard for me at times to not come to terms with this stuff, but even just going to like the grocery store and not being able to lock eyes with the person at the register was hard for me. And I would, but it was hard to go through all of that on unemployment. And it just was a time when I could prepare to start a business. So I have one in the digital marketing agency and lead generation space, in the affiliate marketing space, within the health space, and then other verticals. And eventually I came to this side and I learned a lot about funding. And through my own trials and errors and my trials and tribulations, I went through trying to get them funding and figuring out what worked, what didn't work, and what I didn't want to do. I've seen a lot of people make mistakes that I went through and more severe, and the repercussions of it. And so I thought, let me share with people the experiences, and then I got into it even deeper, and this is my sole focus, as those are subcontracted, contracted out, and I can come back and just check them out from time to time and move some things around. So I'm a very loyal person. You'll learn that about me. Sorry, there's the lighting here on my laptop. Integrity galore, I have that. I value that a lot. Commitment, fitness, when I can have that. Honesty, trustworthiness, staying humble, accountable, responsible. Core visions, values, and mission matter to me a lot about someone. Their characteristics, their health, and their relationships, I look at a lot. And then I look at how I can help them in funding. There's those aspects. So I do a lot more. Now, on this side of getting funding, is it really possible to do a no credit check small business loan or a loan of any kind, or funding for that matter? And the answer is yes and no. So I have a specific lender with an exclusive partnership where right now they're doing up to 10K in 10 minutes, more or less. More or less meaning where you probably take a little bit more time to finish the application, or it could be less time. But it's same day, instant approval, up to 10,000 for independent contractors, gig workers. Think about Uber drivers, Lyft drivers, grocery delivery shoppers. There's many different industries, and it doesn't only pertain to those. It can be any small business that can't get also funding far beyond 10K right now, or you're looking for a small amount to get started with, and there is no credit check. So this specific lender does no credit check. There's no credit check requirements unless they change things, and they'd have to look at it, but they're strictly basing it off of cash flow and revenue. So if you're a startup and you're not generating at least 3,000 plus in your lowest month in the last 90 days, that's 3 months of bank statements usually, this wouldn't work. So what do you do if you're a startup and you're pre-revenue or have less than 3,000 and you don't have about 4 months time in business? There's another option I'll get into in less than about a minute, so please stick with me. But if you're looking for a no credit check loan, what these are, they're called advances. And what happens is they're not technically a loan that's amortized on a remittance schedule. So they're going to an advance or advance you a lump sum depending on your current cash flow, your projected cash flow, how predictable that will be month over month, and based upon what your needs for funding are. It's very important that you align what those funds are for, because whenever I help businesses, whatever it is, you can be in the construction, in any vertical and horizontal of construction, roofing, concrete, there's many others. You can get into manufacturing of many types. There's cleaning businesses, retail, restaurants, medical, technology. There's a lot. And there's also funding out there for real estate investors that I won't get into right now. Maybe if we have time at the end, we'll get into. But cash flow and revenue reserves is helpful to have more of. Average daily balances, starting and ending. There's more that I look at in bank statements because I review a lot. I'm a very analytical, cerebral. I'm more of an introvert. So I can look at a lot of documents and find joy in that. I get a lot of stimulation when I review a lot of documents, and that's a lot of joy of what I get. Looking at mathematical formulas, understanding the cash flow and profitability analysis, free operating cash flow, financial investment cash flow. There's a lot of different things that I look at for different services and purposes. So with this, what you would do is if you're generating at least $3,000 on your lowest month in the last 90 days and you have about 4 months, sometimes 3 months, but usually 4 months time in business, then they're going to advance normally 25 to 75% of your monthly revenue. And what is looked at is your average monthly revenue. Your lowest monthly revenue in the last 3 months usually weighs the most. And if you look at a difference between 3,000 and maybe you're generating 4,000 on your lowest, and then another month you had 10,000, and you're saying you're averaging 6,000, like that's somewhat closer, but that 10,000 was another time and probably was about 6 months ago. So we're looking at what's most recent. We want to know what's being affected right now. We want to know why it is the way that it is. And then justifying how you use your funds, you need to understand that a lot of this is not supposed to be inexpensive. It's somewhat expensive to the wrong person. So if you're saying, I'm just going to need 5,000 to 7,000, you take 7,000, let's say, you are doing at your minimum 10 to 12, maybe you're not exceeding 14, or you're not at 15,000, but you're doing, let's say, around 12,000, and approval for 7,000 comes in. Okay, great. That's a higher percentage of an approval. Why? Because the higher the revenue, the higher possibility of the percentage of an approval. Now, if you have no experience, but you're generating like 12,000, a lot of the times these lenders have their buckets, and I know what they want. I know what each lender is exactly looking for. I've seen so many files get approved and disapproved that I know like the back of my head. I know, okay, credit's this, cash flow is this, here's the revenue, here's the average, here's the, if they had collateral. There's no collateral in this part, so you don't have to worry about offering collateral to these no credit check lenders. And there's not a lot of them out there. And so what happens is 12,000, let's say, to be on the safe side, half of that, maybe 6,000 gets approved for. If you're new to it, it's going to probably be less in some cases, so they'll probably say 5,000 just to be safe. If you're doing 10,000, it's closer to 5 to 4. It could be a little bit less there too, but there's something that I have to look at in the file to understand the industry, understand the cash flow, the reserves. Once I understand a better picture of it, then I have a better lock on that answer, and it's more of a better projected range. And then looking at documents, it gets even more dialed in. And so let's say that now 7,000 advanced, okay, off that 12,000, let's say, for example, how much am I paying back is the question for most people. And what are the rates? What are the terms? So 7,000, let's say, maybe you're paying back 9 to 10,000. Okay, well, that already seems a little steep, but I know this won't be longer term because you're a higher risk. No credit check is one thing. That's already a high risk. No collateral. Okay, that's already a high enough risk. So then you're looking for 80,000 doing 5,000. That's just not going to work. Even if you chalked it up and you looked at the terms of rates and everything over the time, and they're not going to give you a long time. You're already assessed at a higher risk. Can't afford that. So let's just say 7, paying back 10,000 or 9,000, whatever it is, 11,000. Can you pay that back in 3 to 6 months? They give you, let's say, 5 months to pay back the 7,000. Could you pay it back less than 5 months? You have to understand the cost of the funds. You take 7,000, paying back 5,000 or even just 3,000 on it, whatever it is. Are you making more than 11,000? Are you making more than what the payback total is, than what the cost of funds are? A lot of people try to justify this as, well, I just needed cash flow and I can't do it. Of course, because you're already in a deficit, or you're going to go into something where you need to be better prepared. And if you don't have these accounts by that time, or you don't have a merger account, or whatever's happening, distribution, it's like, yes, your cash flow is already going to be stunting down. And then taking this, you're going to be up maybe for a month, but you won't be able to pay it off until the 3rd month. You have 5 months maybe to pay it off, but then in the 3rd month, you see your revenue dip, your sales dip, and there's a lot of other issues that happen. And so if you're already taking on other debt, other expenses, then you got to start thinking about, well, when can I take less maybe instead of that 7,000 so I can feel safer? And then you think about that. Is there that negotiation to do that? So now you start off by having less, and having less of a repayment. And this lender does a weekly repayment. There are no daily, there are no bi-weekly or monthly. Just you don't see it in this space unless you're getting a bank term loan and or a different line of credit, maybe from a bank. And I'll get into those here in a second, as well as the startup solutions. But this lender has those requirements, so you're paying back 20,000 maybe. Let's do a higher example. Let's say you go out to a different lender, and these lenders do credit checks. But at a credit check level, let's say it's 20,000 paying back 25,000, you're probably given a 1.25 to a 1.29 or so rate. So can you make more than 25,000 that you're paying back? That's a different example. But this lender that I have usually does up to 10,000, and you're not doing at your minimum 15,000 or more. They're willing to look at that file, even if you're doing more and you want to go through them. That's another option, and you didn't want that much. But there's nothing wrong with having a credit check. It just depends on the reasons, and I get all the reasons. I've been there, done that, in terms of seeing what other people are going through and a lot of the problems that come up with why people are looking for no credit check loans. And I'm not going to start getting into all of them. You can leave that up to interpretation. I've seen it all, literally. And there's always something else. Okay, it's maybe just a subset of that. And so you have your reasons for it. Now, when you're trying to get higher funding, you have to have your personal credit checked, because you're assuming the responsibility. The entity is not the one that falls 100% in liability of it. Assets and liability does not matter at that point. What matters is you are the person, you are the entity overall who's overseeing the business. So your credit has to be checked in that regard. We have to know what kind of accountability and responsibility you have in making the payments. In fact, making sure that all the history and things that are in the reports are sound. Otherwise, that raises a red flag to the lender or lenders, and they'll see a lot of this. Even before that, it's my place to make sure that I understand the credit, I understand everything else before we go to that right lender, so you're not wasting your energy and time. And I communicate with the lender on the back end, do a lot of stuff under review that you guys don't see, a lot of ethical stuff, of course. Now, the other way to this, and I'm not going to go too far into the no credit check lender, I've given you some details to that, and they base it off of factor rates. Like I said, the 1.25 example, but if you got less, of course, that's different. Between a 1.29 to a 1.69 is just a total payback. And I've created a video on this. I'll try to link it to you down below. There might be some extra documentation resources if you're watching this on YouTube. And check that out to get started, see about all the requirements. I won't go through all of it right now. I want to dive into a different topic. But again, that no credit check provider, up to 10K in 10 minutes. You're going to learn more by viewing the video and or the details to the funding program in a different way. Down below, we'll cover it even more. I've created a lot of content on this in the past, but very reasonable. Make sure you have the right ROI, the needs for funds. Don't just backtrack and just use it all for expenses and trying to cover all other credit card debt, and then you find out that you don't have enough to make sure you make the repayment. Like it's just going to dig you up into an even deeper hole. You don't want to default on any of this, because once you default, it's hard to get approved again. And any lender that will approve for this is a lower tier lender, and this would likely be the one that would look at it, but it would be still very hard to go through because a lot of them don't give a second chance. It's very rare you see. It's very minimal. I've had some people come through and get it, but it's hard for a lot of people. But this is a lender that could look at defaults and consider it. In most cases, sometimes things change though. And so that's one thing. A no credit check business loan. Think about the accounts payables, accounts receivables. Do you have any invoices that are not completely paid? They're unpaid. You're expecting, like you have a category on your Excel spreadsheet. This is accounts from these clients where they're on a subscription plan or however it is, and you're getting only a specific percentage and amount month over month, or however you have that progressed as, whatever kind of billing and all this, then that's expected revenue coming in. It's not exact receipts or not exact revenue yet, but you can make a case to say, I have these account receivables, and how can I give that up so I can bridge the cash flow? So then now you're working with an account receivables lender, and I have the best in that space as well with factoring companies. Invoice factoring is what you would hear it called, and there's other words for it as well. And each industry is different depending on the needs, depending on the amount of factored receivables and what you need to get factored in. And if it's not tied up to something else and you can't have enough liquid, there's a lot of problems also with those types of things. But they won't necessarily look at your credit. They might assume, usually will look and assume the credit of the person who's paying you. You're invoicing them, they're paying you, and the invoice factoring company checks upon the consumer, the customer that you have, and the customers, and they'll base it off their credit. They'll base it off their details and the likelihood of them paying. So then the factoring company can get their amount back. That's just absolutely how it works. And so normally not a credit check, maybe at times, but normally it isn't with collateral, and that's collateral you're offering up if you have that. There's also equipment, commercial vehicle equipment, heavy equipment. There is inventory, real estate, developable land. There's quite a few things there that are included. At times a credit check if need be, but usually you'll see with the only collateral option, no credit check is usually required, or maybe they ask for a minimum. If it's like a real estate property and then you're doing a cash out refinance, that's different, or a sale leaseback. There's a lot of different situations, but like with anything real estate, a lot of the times you want a 660 credit score, sometimes 550 more or less can push it through depending on the circumstances, but with a lot of real estate you'll want to see 600 credit. But there's other situations for this, and that's just some of it. If you're a startup and you're looking for a no credit check solution and you don't meet those needs, like that lender that can help you, you don't have these other situations that would help. The other part of it is you would want to look at micro lending, peer-to-peer lending with less than desirable credit, maybe 620, 600, at times less than that. You're going to make a rather hard case for yourself, especially if you're going down the wrong provider. And that's where a lot of people have that concern is, well, I don't want a credit check. And there's those reasons why. I'm not going to get into them. I've seen them all, literally, from everything. And things that it wasn't on your own doing, it was just somebody else that did it to your credit or whatever happened, okay? But there's a lot of things that happen and come up and why people want it. And on this side, it's going to be a little bit harder because you are a startup. Who's going to trust you without a credit check? Peer-to-peer lending, street shares, and things like that change. It still require a few things. It's become a lot harder to get funding. Grant opportunities are likely your best route, or the other way is using a credit partner. And I'll get into that in a second. But for startups, what the best route to go into is not always exactly a small business loan because of revenue circumstances and banks already disapprove, but it's to go through, a creative credit-backed solution. And this can do like a personal term / installment loan, or a personal line of credit, and or at times that happens. I've helped people with that. That has different credit score requirements, and it's a lot harder to get a personal line of credit than a HELOC, to be honest with you, especially when you're using it for business purposes, more so. And then you also have 0% interest business credit cards for 6 to 18 plus months, 20, 24 months. I've seen those. I help out a lot of people with that. You have on the business side with it. You can also do it on the personal side. Personal side would probably be the last resort unless that was our funding goal until you get business credit ready. There's levels to a lot of this, and there could be a personal and business combo depending on what you qualify for. But the other part of it is if you brought in a credit partner. So if you don't want to use your credit for some reason and you want to secure business credit cards at 0% interest without collateral, without documents, and a lot of the stuff, projected revenue, etc., for whatever reason, but you have a partner in your business that owns at least 10%, sometimes 20%. We're not going to get into LOIs, MOUs, and all this other stuff. And you have these agreements. Those are agreements set up by your parties in the business. That doesn't normally be brought to us, and that has to change everything in the approval amounts. That's a whole different structure. And so if you had a business partner for at least 10% of the business, sometimes 20, but usually 10% and above, can do it. And they have better credit. And better credit, I mean, like not just 660, not just subprime 650 credit. I'm saying like above 670. Like 670 is an entrance point if it's just due to high balances, high utilization on your revolving account or accounts, and how much of a balance pay down does it need to be, or how much of a help do you need if it needs to be like a loan that needs to be derived from that, or there's a lot more that maybe you'd be able to do on your own, the other half, etc. And if it's just due to that, it's not due to all these outliers or all these other circumstances where it's late payments recently, more than 3 to 4 inquiries, more than 4 inquiries in the last 6 or 12 months, too many missed late payments, too many hard pulls, too many unsecured accounts, too many like there's a lot of other things. I'm not getting into all the specific requirements. I'll leave information down below, and I'll also leave for you a questionnaire form. Please fill that questionnaire form out. It'll be down below in the description. And it'll be one where I'll give you a 900 or so free grant list that I would normally charge for. And it'll be a 6-step pre-approval lending checklist, so you know without a shadow of a doubt what you're walking into before you get into an application. and I'll give you a very highly personalized and customized email response on your best funding option and options in a PDF, very well put together, showing you information that is not even publicly released. I kid you not, this is great. A lot of people will fill it out. I'm very analytical, so I'll make sure I give that to you in your best scenario and scenarios. But that is there, and it'll be hard if you don't have the right credit. Normally for credit stacking, you want 700 plus credit on all 3 consumer credit bureaus. It used to be at a point like 680, sometimes 670, but 700 plus is it with the market we're in. That could go up, so I'd get in as early as you can. And we put together the applications with the team, and the team will do a lot of that part and have that sequence. I'm following up. I know what's going on the back end, CRM, everything included, and I help people understand what they need to get into it at the stages of the next part of the process. And if you don't have that, but you know you can't get a credit partner or none of that works, maybe you know a business partner who is willing to do that. They have a plan underneath their business but helps you out. And then now you have other things. You can get into authorized user accounts. There's a lot of other stuff. Now, if you don't have a partner, now the other thing, or you do, and you wanted to get just a personal loan or so, you don't have to have them as a business partner. It can be anybody outside of the business, but it's for the business credit cards a lot of the times on the business side that they would need to be a business partner to secure the cards, one person per each entity. But yeah, that's what I'm going to leave it at for now. And better credit, the better. The higher credit, the better. For personal funding, you do want to have at around a 680 on all 3 consumer credit bureaus. Sometimes 680 FICO Experian is all would be required. I have different providers, each one of them with their different needs. And so I'll just leave it at that. There's more details to this, of course. I can't go through all the requirements in one video, but I've put it all together, especially in documents for you. But down below in the description, the best place, honestly, to get started is with the Creative Credit Back solution. Even if you have revenue coming in, you're like, maybe I don't want to do that. Maybe I have better credit, I'm going to leverage 0%. Or I can get a personal term loan within 1 to 5 years instead of having a $5,000 amount paying back in 6 months. I can do it. I don't need 2 years. I'm not going to probably even get that. So let's just do this. The benefit is there. It makes sense. Let's go forward with it. So it all just has to make sense on your scenario, and I can get a better sense of it, especially when you fill out the questionnaire form. When you fill out the questionnaire form, you'll get this lender information, all the details. You'll get the other providers when you move up another level, and the best and what I recommend. You'll get the credit solutions. You'll get the collateral, cash out refinances, liquidity, equity, business credit building, credit repair, all of this included, and you'll be able to reuse this PDF over and over. Once you get it, you're going to be like, it's quite a bit, but I'll guide you on where to look. Here, page 3, page 8 is the link, or here's how I ask for this. Please send this in this way. Done. You're on to the next step. Simple and straightforward. So I hope you got value from this video on the no credit check. EIN only is hard to do. And if you don't have enough cash reserves and enough cash balances in the business bank account, not personal, but business bank account and accounts to look through, and it's continuously coming in, or that's being sat there for a while without being withdrawn, enough business assets and then personal assets can come into play, but it's usually from business assets that is looked at. And it's going to be hard. Even a lot of high corporations with high employees, high revenue, and you would want to have that. It's still hard to get. It's very rare you see that. And with the credit check, you have to be accountable and responsible. If you have to personally guarantee it, which you'll see a lot of the cases. EIN only cards, corporate cards. They're still business cards, but they're corporate cards, and they work at a different level. So don't skip out on the things that you could get fixed. You have to fix the things instead of masking the symptoms. Work on the diagnosis. If there's one, if there's more, plural, work on them. That's what I help people do. Get ready for bank term loans, SBA loans. They're going to check credit. Those are different levels to it as well if you're looking for more. And could you qualify? They're going to look at business liquid credit scores, FICO SPSS scores. They're going to look at extra documentation. Do you want to provide all that documentation? Do you have the credit requirements for it? Do you have the time to go through it? Is there a tax lien that's going to write that off? You got to clear that off first. There's a lot of other things, UCC liens and how many UCC liens and all. There's so much more. And with these advances products, they usually don't report to personal credit unless you like miss payments or that's reflective on and then you default or so. That can be a problem, but don't do that. Don't put yourself in a strain where you know you won't be able to cover that. So that is everything from me. And there's other things out there that you might be able to do, but don't shortcut things. Don't try to find something that's like, well, here's this, and then somebody showed me a secret shortcut, and that's secret is just another way for using a marketing term. And it's also what they're trying to do is push you into something where you might not get it, but then they're going to bait and switch you. And the next thing you know, they have your information so they can just do whatever they want with it. Really, you will have no option to it. And they might resell your information. Now they're working underneath another third party, and then that third party platform has your information. I know how all that works on the back end. You have to be careful of backdoors, a lot of bad lenders taking advantage of you. And a lot of you think you're being taken advantage of because of the offers, and it was very reasonable. You just don't have the education to understand. And maybe it's the financial structure, operations of the business, the management of it. That's just at the end of the day what a lot of people miss. And it's just the financial part, but it's all understanding the operations of their business. And if you don't know how to grow it, if you don't know how to mitigate the expenses and grow your revenue, like there's a lot of other things that people just don't account for, and they get upset when they don't get what they want. And it's just their attitude, it's their character at the end of the day, it's their moral compass. It's also, and even because they didn't have an education, it's still your moral compass, the way you act about it. I would have thought, if I didn't know, maybe I should get more information. How do I get more information to better prepare? Instead of lashing out and being upset about something, learn it. And that's what I'm here to do, is help you guys. If you don't know, I'm here to do that. All information will be in the bio or in the link down below in the description. There will be more information to get started. Questionnaire form is the best place to begin with. And if you did get value out of this video, please give it a thumbs up. Share with those who you feel will find value from it. It can be a complete stranger, a friend, or a family member, or a foe, whoever it is, but you're helping someone else out. And if you haven't subscribed from wherever you're watching, please go ahead and follow. And if you're watching this on YouTube later or now, please go ahead and subscribe if you haven't, and click that bell notification icon so you do not miss any future content I'll be coming out with. Appreciate you. I'm very tired as an introvert. It's like I just finished the race and I need to like lay on the ground, but I won't. So I'm gonna go relax. Appreciate you. Thank you for tuning in. Take 2, take 3, however you want to say it. I've had to do that a couple times before this. I'm not great on video, but hopefully that helps out. Thank you for everything. Again, in the description is all the information, and I'll talk to you in the next one. Take care. Bye. Thank you.